You think we've learned a lesson from the last real estate bubble burst, 2008? Hi, this is Israel, loan officer down here in Southern California. And on this video, we're going to be talking about financial tips, market news, and the most important thing, which is why you are here. What are those mortgage interest rates at? So with that, let's go ahead and get started. How's it going, everyone? Today is December 7th, 2020, and the article reads as home equity continues to rise across America in the third quarter despite coronavirus. This was published just recently, November 5th. Want to show you a graphic, which I think it's really interesting. In fact, let me get out of the shot here so you can kind of see the whole thing. What do we have here? Cash out refi originations. So these are the people that did the refi and pulled money out. Greens are all those that just did a simple refi. They decided to just concentrate on the rate, not pull any money out. So that's what they are. And then the marching ants. These are the folks that not only did a refi, not only pulled money out, but the amount or the percentages of money that was pulled out. So with that, we start down here, 2005, third quarter. What do we have? There's a higher percentage of people that did a cash out versus those that just concentrated on, bringing down their mortgage interest rate. And take a look at the marching ants. Everybody was just pulling money out like crazy. And you see you see the pattern there. We reached 2008. We have the crash, and then we have our second, our part of the crash still coming down. And now let's fast forward to 2020, third quarter. What do we have? Look at this. It's like completely reversed. We have more people refinancing and just not pulling any money out, just concentrating on bringing those mortgage interest as low as they can. And the people that are pulling money out and refinancing, check this out. Look at the numbers. Little marching ants down there. They just keep going. They've kept going all the way down to what we have it now at a 27%. That's extremely healthy. That basically goes to show you that people probably did remember and haven't forgotten the lesson back in 2008. Now, there's 3 triggers that are going to occur in 2021 given this data. And these are the followings. Let's go ahead and move on to the next one. Here you go. I have it zoomed. I've zoomed into it so you can kind of see it here. If I can get my things working. There we go. Boom. There it is. Okay. Same graphic, just little zoom. All right. So we're going to have a market of homeowners that are going to be carrying lower mortgage rates. And that's good, right? It's good because these times are really uncertain. And so what people are doing nowadays is they're saying, look, we don't know what's going to happen tomorrow. I don't want to take any chances. So let's go ahead and refinance, take advantage of these really low interest rates. And if something does or were to happen, at least I have enough of a cushion by dropping down my mortgage payment that I'll have a better opportunity to take that punch. Point number 2, less homeowners pulling cash out of their homes. Yes, people are still refinancing, pulling money out, but they're not as many as they were in the past. Again, I believe people are being a little bit more conservative. They don't want to pull that trigger and get all that equity out. And I think out of all these first 2, number 3 is by far the most important one. Yes, you have people refinancing, pulling money out, but the amounts are decreasing. That just goes to show that we have learned our lesson. We don't want to exceed. We don't want to be, going above and beyond what we can afford. And with that, I think these 3 indicators are going to be triggers that come 2021, we might be looking at a stronger. Obviously, it's going to continue to grow. Those properties will continue to increase in value, but we're going to have a much stronger, healthier real estate market compared to the 2008 figures that we had back then. So with that, just going to leave that to you. Let's move on really quick to how the market behaved with those mortgage-backed securities. All right, we have 21 positive numbers. Long candles, that's what we want to see. We want to see those white long candles. Why? Because those are going to keep those mortgage rates low versus what happened on Friday. Yeah, we had a little bit of a hiccup there. So let's go see how those rates stack up as of today. All right, conventional. Well, let's get out of that. There we go. Conventional loan. And wait, let me get back on the shot. There we go. Conventional loans, 30-year fix with a 20% down payment. There any changes? Yes, for all those people in the 700 range, 700 FICO score range, rates improved a little bit, 2.625. How's the competition? Well, B of A and Wells Fargo always trailing with us, 2.625. But again, take a look at the APR. It's going to be that much lower. So it's going to cost you less to refinance with us. Let's move on to the FHA. Here we go. FHA, only difference, just requires 3.5% down payment. Not a lot of change from today, Monday versus Friday. Everything basically stayed the same, except with the competition. Quicken Loans 2.3, US Bank and Citibank at 2.75. This is the thing I always put emphasis on. If you were to go to any one of these banks and say, hey, I'd like to take advantage of one of these rates you have, well, they're going to tell you, great, do you have a 740 FICO score? No, I'm like in the 700 range. Sorry. With us, we not only do you get it at 740, but you also get it if you have a lower FICO score than that, starting at 700. So just wanted to point that out. Okay, let's go take a look at those properties. Who are we going to see, or what we're going to see today? Castaic. It's going to be a 3 bedrooms, 2 bath, going for $449. Here are little pics. You can take a look at them. And depending on your FICO score, you can go ahead and put a pause on the video. That's the rate where you would be getting from us as of today. That's your full entire payment. That's including principal, interest, property taxes, PMI, hazard insurance, the works. Everything's in there. Down payment, $15,000 and some change for this 3 bedroom, 2 bath in the city of Castaic. All right, what's the next one? Canyon Country. What do we got? Oh, we don't want that. Let's go back here. No. Did we quit it? I believe we did. Hold on, guys. Got a little hiccup. I think I hit the... Let's back up really quick. And here we go. Okay. Boom, 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 boom. Quickly. Canyon Country. 325. Nope, that's Palmdale. There we go. All right. Canyon Country. Country, 3 bedrooms, 2 bath, 325. HOA, 333 with a down payment of 11,000 and some change. Put a freeze on that and you can take a look at what those rates are. Okay, we lost some time there on that little hiccup. Thank you so much for your time. We're actually working on a little feature on the website where you're going to be able to go to it once it's up and ready. If you like a consultation via Zoom, you can set it up, schedule it, and we can have a Zoom meeting. If not, you can always give me a call at 661-388-7667. Thank you so very much. If you're thinking of refinancing and you're working with a lender right now, reach out to us. We could definitely beat them. I'm quite sure of that. If you're thinking about buying, hopefully this information is going to help you out. And if you are a homeowner and thinking about what the value of your property is, we could certainly help you with that. We have a great team that can help us with that as well. Thank you again. God bless. And I'll see you guys on the next video. Take care. Bye-bye.